Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik. This is episode 6 of my Dow Analysis series, and in this video we're going to be analyzing the fifth smallest company in the Dow Jones Industrial Average by market cap, and that company is none other than Boeing stock, ticker symbol BA. If you find value in my videos, make sure to like and subscribe so you don't miss out on future content. This is Frank Mularcik. So as we can see in our spreadsheet here, we have analyzed the first 3 companies in the Dow, and actually the last video we did was on 3M, so we can check that one off here. And the next video, which is this video, is on Boeing. So if you did miss that 3M video, make sure to check that one out as well. But we're going to start off with Boeing by looking at some information that they actually basically published to investors. So they actually have some pretty decent information on their website, sort of about their business. And so they sort of have this fact sheet, which is super in-depth for their airplane segment, in which they, talk about the different models of airplane that they sell, and how fast they're making them, and all the orders that they have for all these different airplanes. So they go through the 737, which obviously has had some problems, and basically it says that they began receiving regulatory approval to resume operations in the fourth quarter of 2020 and have restarted deliveries then. And since then, they've gotten orders from major airlines for tens, hundreds of 737s. So right now they're producing about 26 per month, and that's expected to increase to around 31. And they have a backlog of over 3,000 737s that are essentially on order, which is pretty cool. And then they go through some of their other models, much smaller backlogs for most of those. But I think in total their backlog for planes is over 4,000. And then they give some details on the defense, space, and security segment, where they talk about some contracts for specific helicopters or planes that they're receiving, and kind of updates going on. So I really like the kind of transparency here. Obviously the global services segment as well. They just give a lot of information here, which is pretty cool to see. And they also have this kind of spreadsheet that they show, if I can find it. Let's see, where is it? Basically it was sort of like a spreadsheet of all the orders and deliveries. Here it is, that they have. So this is kind of like the backlog of planes for the various models, and then they basically have orders and deliveries, and then you can shows throughout the world, and you can sort of look at the orders report, and it shows like the specific month of each order from whatever customer. Sometimes that's going to be confidential, but and the number of orders. And then they also have stuff about deliveries, when they're delivering planes as well, which I'd really just like that transparency, and it's good to be able to see. So overall, from looking at these reports, you can see that they are receiving lots of orders for 737s. They are producing lots of 737s, and they are delivering lots of 737s again. And I think, as we'll see in the annual report, they've basically received approval from the vast majority of countries to begin flying those 737s again, which is awesome. So next we're going to look at the 2021 Boeing annual report, their 10K report. And this beginning part is sort of just the CEO like letter to shareholders, essentially. So the cool thing I want to look at first is the 737 MAX milestones. Obviously for Boeing, one of the biggest problems they've been facing over the last few years is some crashes of 737s, and they were taken out of service, and they had to pass some regulatory approvals basically, and show that their planes were safe essentially. So January 2021, they got approval essentially from the European Union Aviation Safety Agency and the UK Civil Aviation Authority. And then February, Air Canada, United Airlines returned the 737 to service, and then Australia's approving them in March. Alaska Airlines, Southwest Airlines introducing their planes back into service Then they got some orders in March as well from 777 Partners and Southwest Airlines. More certifications from EASA, and Turkish Airlines and Fly Dubai are returning them to service. So the general point here is that a lot of different companies and countries are returning their planes to service and giving them approval to return to service as well, all across the world. And they also talk about increasing cargo demand for freighter planes as opposed to passenger planes, because of trade and e-commerce and the like. So they got 84 orders in 2021 for some of their freighter planes, and they reached a record high e-commerce parts sales, which was more than $2 billion in 2021, which is pretty astounding. And a little note sort of on the 737, basically as of the end of 2021, it says regulators in 185 out of 195 countries, including China, Ethiopia, and Indonesia, have allowed the 737 MAX to resume service or fly within its airspace. And since its return to service starting in late 2020, the 737 MAX made nearly 300,000 revenue flights for 35 operators, accounting for 720,000 flight hours with more than 99% schedule reliability. And they delivered 272 of those airplanes that they made and delivered to customers, and they're steadily increasing production. So essentially they are sort of on the road to recovery, it seems. We can sort of look at the financials as well to get an idea of that. Obviously they do have other segments other than airplanes, but I think airplanes are their primary business for sure. And looking at some of the financial metrics now, we can see revenues. It is good to see revenues grew a little bit from 2020. Obviously they are down quite a bit from 2017, 2018, when they had 90 and over $100 billion in revenue. So they dropped off substantially in 2019 and again in 2020, rebounded a bit in 2021. The good news is, at least from analysts' perspectives, most analysts that I saw were predicting revenues in the $70 to $80 billion range for 2022 and $90 billion range for 2023. So they're sort of well on the way to recovering, it seems. And they've definitely had a smaller loss this year than they did in 2020. So they're definitely recovering, and they're expecting, I think, to become profitable again this year. So that is definitely a good sign. And essentially they have like $377 billion of backlog of orders, and about $356 billion of that is contractual. So that's good to see that most of the time those orders aren't going to be backed out of per se. So the overall feeling I get from reading some of this information mostly is that they've had some tough times and certainly have lost some money over the past few years, certainly, but they are sort of on the road to recovery and they are getting there. For me, I definitely want to see them post some positive earnings, some positive cash flows. I think they might have posted positive cash flows in the fourth quarter of 2021. I'm not positive on that, but I believe that is the case. We're also going to take a look here at the balance sheet. If I can find it real quick, I think it should be right down here. Yeah, so the balance sheet, definitely not fantastic, I would say. So looking here, total current assets of around $109 billion compared to total current liabilities of $82 billion, which on the surface level is good to see. But the thing that I don't really like about this is the majority of those current assets are in inventories, which are not super liquid. Obviously, they are hoping to get those inventories out the door and delivered to customers, but of themselves, those inventories are really not that liquid, which is a little bit of an issue, I guess, in my eyes. And total assets are really only around $138 billion compared to total liabilities of $153 billion, sorry. So obviously it's not good that total liabilities are greater than total assets. The good thing to see is that long-term debt is decreasing from around $62 billion this year to around 57. Not that substantial of an increase. I think if I remember correctly, let me check my notes, they had around $13 billion, sorry, $14 billion in long-term debt at the end of 2018 and $27 billion of long-term debt at the end of 2019. So that debt, obviously, up to 2020 and 2021 is up very substantially. Hopefully we can see them bring that down more. But I would say, profitability and positive free cash flow is, at this point, the higher priority for them. But, in the long term, I think I would like to see that definitely come down some, and, return sort of to those 2018 levels of, $10-20 billion of debt. And looking at the dividends, Boeing does not currently pay a dividend. They used to pay dividends, and they basically cut that at the beginning of the pandemic in March of 2020. So their last dividend was in March of 2020, and they had a pretty decent dividend history before then. You can see they were increasing their dividend a fairly decent amount, which is good to see, but definitely would not expect any dividends or share buybacks within the next few years until they're able to, show some positive earnings and drastically reduce that debt. And I personally would want them to do those things before they start paying dividends again as well. So like we said before, Boeing doesn't have positive earnings right now, so it doesn't really make much sense to look at a PE ratio since it would be negative, and that doesn't really mean anything. So what we can do is sort of look at some estimations of future earnings. So right now I'm just on Yahoo Finance and looking at the analysis, which is basically going to give us the average estimate of some analyst opinions basically on what Boeing's earnings will be. So right now for the full year of 2022, these 7 analysts on average are predicting around a 70-cent loss per share. So we still can't really calculate a PE ratio for that. But for the full year 2023, they are expecting a $5.47 profit per share or earnings per share. So we can try to calculate that PE ratio. So if we take the current price of around $148.61, divide that by the earnings of $5.47, that gives us a PE ratio of around 27. And even looking at the, sector as a whole, the industrial sector, their average is around 19 or 20 right now for the industrial sector as an average PE ratio. And looking at the aerospace industry specifically, their average is also right around 19 or 20. So even looking out, a 2-year and a 2-year forward PE ratio almost, still looks pretty overvalued at this price from an earnings perspective. But you do have to consider that since they are kind of rebounding, those earnings could grow quickly, so that could be warranted. We're also going to try to take a look at a chart. We would do a DCF, but again, negative earnings and negative free cash flows don't really help us much with a DCF. So just looking at a chart as our sort of final assessment, I guess. So this is looking over the past 3 years. Obviously, they were trading in the 300s, high 300s before the pandemic, and then they dropped off all the way down to 89. That would definitely be a good price that I would like to have bought the stock at for sure. But if we zoom in a bit, over the past 2 years, we can see they've kind of been trading in this, range. I guess they've been trading in a range of around 150 to, 270 or probably 250. And recently, over the past few months, it's dropped off, below 200 pretty quickly. And right now, this 140 level, they're right now at 148, and this 140 level actually has a decent amount of support back here in, October of 2020. They kind of got close to that 140 and bounced up a little bit. So I would say the 140 level is a decent level of support, and I would not expect them to drop much lower than this, but if they do, there's really not much volume at all below there, so who knows what could happen if they do drop below this 140-ish level. So honestly, for me, based on a fundamental and technical level, I don't think Boeing is super attractive at these prices. Obviously, I'm more in most cases focused on dividends, and I'm a dividend investor, but I am open to looking at other opportunities if I do see them. But for me right now, I guess it's a little bit too risky, and I'm just not exactly sure how well they're going to recover. I think they definitely are going to recover some as they start, receiving more orders and actually ramping up production for their 737s even more. But at this point, they haven't shown the results, I guess, to really, show that they are going to be back to sort of what they were a few years ago. So I think maybe in a few quarters, if they see some better results and start to continue to see better results, it could be attractive. But even like I said before, looking out 2 years on the earnings, it's still giving us a PE ratio that really is not that attractive either. So definitely, I would say I would probably be excited about this company, maybe closer to the $100 level at this point. But I would definitely want to wait a little bit and see a little bit what happens, which again is obviously most likely going to reduce potential returns, but at this point I just don't have a lot of faith in a super strong recovery to where they were a few years ago. So let me know what you guys think of Boeing stock. Obviously lots happening with this company over the past few years, so would love to hear your opinions down in the comments below. Just want to thank everyone for sticking around to the end of the video, and I'll see you in the next one.